Teşekkürler. Thank you very much for your kind introduction. I would like to express my gratitude to SteelOrbis for inviting me to speak at their 20th annual conference, New Horizons 2025. It is a tremendous honor for me to be part of this event. I've been learning a lot from the distinguished speakers and the conversation I had with the fellow participants in the conference. This year's conference is also special because Mr. Dalbert of Charcoal is here as the chair of the World Steel Association. I'd like to take this opportunity to congratulate Mr. Dalbert for his appointment to the prestigious position. For those who you may not be so familiar with the World Steel is a global steel organization which has members from the countries whose crude steel production account for 85% of the global steel industry. The appointment of Mr. Dalbert as a chair reflects his steadfast commitment to the steel industry. It's also a testament to Turkey's rising position and significant role, not only in the global steel industry, but in the world community also. Last month, I heard that Turkey is going to host a 31st session of the Conference of the Parties, COP31, next year. Because of the Turkey's unique position, Turkey is expected to promote solidarity between the developing countries and the developed countries. Talking about World Steel. World Steel was established in 1967, almost 70 years ago. I haven't been attending its meetings since 1993 and observing the evolution of the association over 30 years from the inside. So I can tell you with confidence, World Steel has continued to provide a platform for its members to share their experiences and address common challenges. These days, people are becoming more inward-looking and less interested in multinational approaches and undertakings. However, the challenges we face are so daunting that we cannot afford to lose the sight of our common ground and shared experience from which we advocate for our industry and the fight against competing materials. In this regard, World Steel continues to be relevant, and we are fortunate to have Mr. Dalbert as a leader as we face and address issues together. Today, I would like to start with a global overview, then talk about the recent developments in East Asia, China, Japan, and Korea. Then we'll briefly touch on our company, JFE Steel. I hope I will not bore with you since you have heavy lunch. This is, Global Economic Outlook. IMF issued its latest World Economic Outlook in October, revising it upward relative to the April outlook. It states some extremes of higher tariffs were tempered, thanks to subsequent deals and resets, but the overall environment remains volatile, and temporary factors that supported activity in the first half of 2025, such as front-loading, are fading. According to the IMF, the global growth, please look at the far right, is projected slow from 3.3% in 2024 and 3.2% in 2025 and 3.1% in 2026, with advanced economies growing around 1.5% and emerging market and developing economies just around 4%. China's economy on the far left, with real estate activity continuing to suffer, lacks the strengths it once had. Its economic growth rate is forecast to continue going down in the years to come. India continues to grow strongly. In ASEAN, growth is also expected to continue. Facing challenges, Europe's growth continues to be slow. I will talk about Japan and Korea later, and leave it to the other speakers to elaborate on Turkey. Oh, excuse me. Okay. World Steel published its short-range outlook in October. Its view is the global steel demand will bottom out in 2025 and demonstrate growth in 2026. Despite a considerable escalation of global trade war, and inherent uncertainties, this positive outlook is supported by recent developments, and the size of projected growth in 2026 varies region to region. Considering the potential challenges, World Steel states that they are cautiously optimistic. According to World Steel, global steel demand, on the right, is forecast to remain at 1.75 billion tons. Global steel demand is forecast to rebound by 1.3% to 1.77 billion tons in 2026. Looking at regions, China's steel demand, at the far right, is forecast to decline 2% in 2025 and a further 1% in 2026. Steel demand in the developing world, excluding China, is projected to grow by 3.5% in 2025, 4.7% in 2026, driven by performance in India, some ASEAN and MENA countries. Steel demand in the developed world is forecast to decrease 0.5% in 2025, marking the fourth consecutive year of decline since 2021, and expected to increase 1.5% in 2026. This slide is a comparison of the top 10 countries in terms of steel demand. Turkey was in the 8th position in 2021 and is forecast to rank number 6 next year. Developments in East Asia. This chart summarizes what I explained with my earlier slides. For China, for China, please look at the scale on the left. China is the red bar. And for Japan and Korea, ASEAN, India, please look at the scale on the right. Let's take a closer look at East Asia. First, China. In November, China released its October statistics, which shows that China's GDP growth rate has been decelerating. Industrial production, lower left, is relatively solid, but grew at its weakest pace in October. Fixed asset investment, that is lower right, decreased by 1.7% in January to October, for the first time since the pandemic, facing real estate investment. Falling real estate investment dragged down overall economic performance. In October, retail sales grew at the weakest pace since August last year. The exports, lower right, decreased after a month of export rush, attempting to avoid higher tariffs. Steel demand, lower left, is forecast to decrease in 2025 and 26, Due to weak real estate sector, structural shift from the investment-led economy to a consumption-led one, and dwindling population. Okay. Oops. Okay. Let us take a look at steel production and export and import. The chart on the left shows the crude steel production has decreased marginally since 2021. And the further decline in domestic steel demand has seemingly been increasing export pressure. Considering China's export pace so far this year, China's export is likely to go over 100 million tons this year also, probably to a record high. Let's turn to developments in Japan. Real GDP was boosted by front-loaded export in Q2 this year. On this chart, export is the green bar, blue bar. But the reaction and decrease in export to the US, the weight on the economy in Q3. Real GDP is forecast to grow moderately in 2025 and 26. Industrial production and auto production have remained largely flat. Japanese auto companies reduced export prices to the US from April and started raising prices, but only gradually. Car exports to the US decreased in Q3. Housing and non-residential building construction have been weak due to increased construction costs, an ongoing labor shortage, and the change of regulations. Steel use on the left is on the right, is forecast to continue to decrease in 2025 and 26, mainly due to the weak construction sector. Next, Korea. South Korea's economy has faced challenges such as delayed recovery in construction investment, labor issues, and export slowdowns due to US tariffs. GDP is expected to grow by 0.9% in 2025, the lowest level after the pandemic, mainly due to the weakness in construction investment. In 2026, economic growth is expected to rebound 1.6% as policy measures support our recovery in domestic demand. Construction investment is expected to decrease by 8.5% in 2026, the largest fall since the Asia financial crisis in 1998. A rebound is forecast in 2026. Auto domestic production is expected to decrease by 2% to 4 million units in 2025 because of slower export, and to continue to remain at the same level 2026. Shipbuilding is one of the key steel-using sectors in South Korea. Shipbuilding orders on the left are expected to decrease in 2025 and to stagnate in 2026 due to slowdown in global trade and China's growing share in the shipbuilding market. Steel use on the right continues to decrease due to the slowdown in construction and manufacturing in 2025. It's forecast to stagnate in 2026 as construction recovers moderately, but manufacturing growth continues to slow due to the deteriorating export conditions. This is a slide about the steel use in China, Japan, and South Korea. The blue part represents construction, and in China, steel use in construction accounts for more than 50%. Surprisingly, South Korea's steel use in construction runs to almost 50%. And because of the size of the China steel production, And China produces largest number of the cars and ships. Their use for autos and other transports do not account for huge chunk of their total use. Let me talk about our company, JFE. JFE Group has the four operating companies: steel, engineering, trading, and shipbuilding. In terms of the contribution to the revenues, steel is the largest business segment. A quick snapshot of JFE Steel. JFE Steel produced 23.5 million tons last year on a consolidated basis. Over 80% of the products are sheets and the plates. The rest are long products, tubular goods, and other goods, including semi-finished products. We have two major steel plants, steelworks, West Japan and East Japan Works. And we developed our business plan for the next 3 years. Our plan is built on the 3 pillars. Rebuild our domestic production structure, expand our overseas business, develop and promote the wider adoption of the green steel. I would like to talk about our global growth strategy based on these pillars. Our strategy's focuses on 3 points: markets, partners, and technology, and the funding. In a nutshell, we want to grow our business in markets with growth potential, together with partners in each market by contributing our technology and funding. Strategic partnerships are what we want to develop. This diagram illustrates the network of global alliances we have built over the years. Picking out one example from the previous slide, I'd like to share more about our partnership with JSW Steel in India. A brief history is mentioned on the right. JFE Steel is a shareholder in JSW Steel as a joint venture of grain-oriented electrical steel. Last week, JFE Steel agreed to acquire 50% of BPSL, Bhushan Power and Steel Limited, an integrated steelworks in eastern India, making BPSL a 50-50 joint venture between JSW and the JFE Steel. I have 2 slides about this transaction. And as I mentioned, we have the 2 major steelworks in Japan. We regard this is the 3rd integrated steelworks for our company. And so this company is a brownfield project. And the history of this company was mentioned on the right-hand side. It was originally a different company, but the company was forced to enter the insolvency process and eventually bought out by JSW Steel in 2017. And producing hot rolled, cold rolled, and bars and wire rods and steel pipes. And the present capacity is 1.4 million tons. This has captive iron ore mines about 200 kilometers away from this steelworks. When we invested in JSW in 2010, JSW was producing only 6.4 million tons. Since then, this company continued to expand its capacity along India's economic growth. JSW issued a guidance for the steel production for this fiscal year which is 30.5 million tons. Presently, this company has crude steel making capacity of 35.7 million tons. It plans to expand this capacity to 51.5 million tons by 2030. So prior to this conference, I received a list of suggested topics from SteelOrbis. One of them was Japan's current trends in the steel industry transformation, change of strategies, M&A, and expansion outside Japan. Value involved in this transaction a little lower than the one of Netflix Warner Brothers transaction, but I'm delighted to say that we were able to reach an agreement with JSW before this conference. The timing couldn't have been better. Thank you for your attention and the opportunity to share my views. Teşekkür ederim.
Thank you so much, Mr. Fujisawa. Do we have any questions from the floor? Mr. Murat.
どうもありがとう、藤沢さん。
Oh,
I have noted that the growth, economical growth rates in those three countries, China, Japan, and Korea, are all estimated to be lower, or I mean slightly higher, but at a low rate. So is it? I'm assuming that this is mostly because of China's economic situation and the export flows out of China. And we understand that, first of all, is this correct? And the second question is, if so, we understand that the stimulus measures by the central government of China have not been so successful so far. Do you expect any change in that direction? I mean, do you foresee any positive reactions to the stimulus measures in China, in terms of domestic market, obviously?
thank you for your very penetrating questions. I should have brought some other experts to answer your questions. Maybe your colleagues from SteelOrbis could address the issues more properly than I can do. So about the growth in the three East Asian countries, yes, there has some impacts from the slowdown of Chinese economy. That is one thing. And Japan has entered this phase of matured economy for some time, and South Korea is following the suit, and they call it the process Japanification, slow economy and the decreasing population, and et cetera, et cetera. Those demographic changes have some impacts, and for the steel industry, our steel use is going down considerably because we had the decade of high yen, so our manufacturing industries shifted the production to the overseas. And so the steel demand, even including the direct, indirect export, is going down. So that is one of the reasons we have to downsize the production capacity in Japan. But to keep shrinking is not the thing we wanted to do. And so that is reasons we have been exploring the growth opportunities. Luckily, we had a partnership with JSW Steel, and India is right in the window of growth opportunities. We want to take advantage of it. So second question about whether the Chinese government's stimulus measures, sufficient or not, and there has been many observations, and so the analysis has been made on that regard. And as you correctly said, former times, the times of the former crisis or economic uncertainties, they have taken more decisive measures. But it seems like that they are quite successful expanding the economy, and because of the implementing large fixed asset investment and so forth, so they are trying to change from that model and so forth. And also the bad loans on the real estate sector is a big thing, and state and provincial governments debts are so enormous, so they are trying to find some sort of soft landing in a way, and the measures taken are not so enough so far. But the thing is, when we talk about the China's, there's one statistics. The statistic is a ratio between the 1 ton of crude steel production against 1 ton of final shipments. So if there's no import, and that ratio should be less than 1, with 1 ton of crude steel, we can produce less than 1 ton of finished products. But surprisingly, the ratio is over 1.5. Maybe this is unique China's statistical practices. We don't know, but there has been, some double counting, etc., etc. So that is causing some extra attention of the Chinese officials, and they are taking some extra measures in the annual auditing and so forth. When it comes to another surprising thing is they have the requirement, and if they want to create a new ton of capacity, they have to dispose more than 1 ton of steel existing capacity. After they're implementing the measures, steel capacity is not decreasing dramatically. This is flat or marginally increasing. So there are so many mystical things happening in China. Maybe your experts in SteelOrbis could decipher those mysteries. So because of the more complicated situations they are facing, and they cannot afford to take drastic measures as they had taken in the past. So, but they are taking some measures. Hopefully, that will have some positive impacts on global excess capacity situation.
Thank you so much. And Mr. Fujisawa, may I ask a very small question from myself about how you see the CBAM challenge is big for the Japanese steel mills. I know that you are doing a lot of stuff to develop at home and also overseas, as you've mentioned about your joint venture with JSW, and it's also very locally focused, as if I'm right. So do you see as CBAM is coming as something big challenge for Japanese mills, or it's manageable and you are doing, you see the ways how to overcome the challenges?
Well, after learning from the speakers this morning, I heard the people in Turkey are more educated about the CBAM than we are in Japan. And because of Turkey's proximity to the US and their dependency on the EU market, we export some tonnage to the EU on some specific segments and grades and so forth. But the CBAM is an issue, but not as big issue as you are talking here in Turkey. And so on the CBAM, what we're doing is that we work with the trade association JISF, and we do have the regular or irregular meetings or government agencies involved, and we are making the comments. And the CBAM and EU ETS is not symmetrical, not to apple. And as one of the speakers mentioned, the EU ETS, the free allocation, it could carry over. But the CBAM certificate is good for 2 years or maybe 1 year and a half. And also the CBAM is, exporters, we are required to submit the certificates on the product basis, but EU ETS on the site basis, and etc. And in exchange of EU ETS, some subsidies has been, devised for the steel mills, the industries in EU. That is not the apple-to-apple, symmetrical things. So those are the things we are, presenting the case to our governments, and we hope the governments will just carry the message to the Commission. But so we are doing our effort, but maybe we could learn something from your experiences.
Thank you so much. I think we are done with the question. Thank you so much, Mr. Fujisawa.
Thank you.